Hello again, everyone. In this technical analysis of the stock market video, I call it stress test because that's exactly what the markets are undergoing right now, and we're only 2 weeks into this. We're going to start off by taking a look at the VIX. Then I want to take a look at the Dow Industrials versus the Dow Transports and how do they compare right now. And then we're going to check in on gold and the gold miners. Okay, so let's start off here with the VIX. On Friday, the VIX hit 54.39 and it closed at 41.94. That was the highest close of this last 2-week explosion. And it's really interesting that for the most part of the last 7 days, we've been trading above 30. And most of it is, the entire trading range of each day. Okay, we had a couple days where it went below. But this is starting to look like another period where the VIX stayed elevated. And I'm going to show you that real quick. Okay, let's take a look at this period right here. This is July into August 2011. You remember 2011, right? The summer of 2011. All that infighting that was going on between President Obama, Speaker Boehner, and then there was chaos in the U.S. government, and the U.S. debt got downgraded, and I'm sure there's a whole lot of other detail I don't even remember. But the markets were collapsing, and the VIX was spiking, and we got all the way up here to a high of 48. Never really got above 48, but look how it stayed above 30. Okay, right in here. Here's the 30 level. I mean, it just chopped up and down, up and down, up and down, stayed above 30 for August, September, October, and then oscillated around 30 through November. So yeah, we're elevated. Can we stay elevated? Yes, we can. I mean, this is just one example. And my gosh, you go back to 2008. I mean, there's a period in 2010 also. We had the flash crash. But I mean, oh my gosh. I mean, yeah, this can stay elevated. So, just get ready right now. We're having a lot of chaos in the market. All right, let's take a look at the Dow Industrials, and I want to compare it to the Dow Transports. So here's what I want to look at. I want to look at this view right here. Okay, so for the week, the Dow was up 455 points. So we popped up a little bit. There was a lot of volatility this week. You can see the range, but look at the range of the previous week. We came down the previous week, and I talked about this before. 24,680 is the critical level because it came down to that point right here where the June low, June 2nd, actually, first week of June, that low, 24,680, and it just wouldn't break through it. It got within literally 1 point of it and then reversed back up. And so far it's held, but here's the other low, the key low, in my opinion. This is the December 2018 low, that huge sell-off that was occurring in the fall. And remember the low that occurred, I think it was Christmas Eve, December 24th, 2018. And look how we went from this where we punched a slightly higher high in September 2018, and now we've continued to thrust to the upside. But what has the Dow Transports done? The Dow Transports have done just the opposite. Okay, September 2018, they did not confirm any of that higher move by the Dow Industrials. So this market, the Dow Transports and the Dow Industrials, which if the market's in good shape, they should be in sync. They're not, okay? And they weren't confirming this move at all. Now it's broken down, but look how the previous week, the Dow Transports broke through all those lows of June, August, and October. And this week actually was Friday's price action that got all the way down within about 20 points of that December 2018 low, 86.36 here on the transports. I feel if we break through this with the Dow Transports, I think it's going to be a very negative sign. I mean, already this to me is showing a significant amount of weakness and seems to be leading the Dow to the downside. We'll see if the Dow starts by breaking, that key level that I just talked about. It needs to break this first, and then we'll see what happens. But that's a picture of a comparison. These two key buddy indices, they are not in sync at all. All right, let's take a look at gold, GLD. All right, I want to start off, let's make sure I've got the right scenario that I want to look at. Let's just start off with the moving average view that I talk about here so we clearly see what happened. On Friday, it was only up 6 cents. You know, a lot of volatility, a tremendous volatility. This big downdraft that occurred back here at the end of February, that was a little bit of a surprise. I mean, it was a pretty big downdraft. Now for the week, what happened? Look at this. So here's the prior week, and then here's what happened this week. We had a pretty big snapback move. It was up $9.17 this week on GLD. And I want to take a look at the Elliott Wave picture in here. And I'm on a daily. I'm going to start off by looking at the weekly view so you have a little bit bigger picture. Okay, so this is the big picture that I've been working. I'm going to adjust this a little bit. Here's that 2011 high. Here's the December of 2015 low. Okay, 5-wave move down. Therefore, we're labeling it wave A. And now we were looking for a corrective move back up, and we got a zigzag. I was originally having this as a triangle. Then I moved to thinking this was more of a zigzag, thinking that we had a nice, clean, impulsive wave to the upside here. But I have moved back to this being a triangle because for a couple of reasons. And it's mainly because of the price action that just happened over the last week. Okay. And the reason, I'll look at that in a minute when we go to the daily, because what that does by moving back to this triangle, it starts the impulsive wave here instead of down here. Okay. And it just, you know, at some point you have to look at the waves and go, do they look right? Are they acting right based on, you know, the pattern that we've got labeled in here? So if I go to the daily view, here's what I'm looking at. Okay. So if we start off here at the end of this B wave, this wave 1 in here looks like it has extended, especially as compared to wave 3. And, you know, usually wave 3 is a fairly strong wave, but, you know, the impulsive waves, the motive waves in here, between 1, 3, and 5, either any of them could extend, okay? And right now it looks to me like wave 1 is extended. So if that's the case, here's the rule, one of the rules, okay, in Elliott Wave methodology. Wave 3 can never be the shortest wave. So if I'm going to label this as wave 1 and 2, have 3, and a 3-wave corrective wave 4, okay, wave 5 cannot be longer than wave 3. So if that's the case, then I look and say, okay, well, where does wave 5 versus 3, where does it equal wave 3? Up here at 171. So therefore it has to be less than that. So right now I'm ballparking it up somewhere in this nature, somewhere in that neighborhood. And of course, here's some other Fibonacci relationships that I'm looking at. C versus A, and I'm talking about intermediate wave C. Where does it equal? Well, we're already beyond that. Okay, it's kind of a guideline. You look to see C equaling A in a big zigzag. And the other thing is when you have a large, well, it doesn't matter whether it's large. If you have a zigzag, you're looking at the B wave as compared to A. The other guideline that I look for is that B is going to retrace up to maybe a maximum of 79% of the wave A. Well, that puts it right in here. So it kind of gives us a zone. I mean, we've got a big zone, but I would say if we keep pushing, we'll be trying to label in here a 5-wave move and get this 5th wave to complete, and then we're going to be turning down. So right now I am leaning into the fact that I think we got more to the upside, but we could get a pullback. And here's why. Because I think this move right here is maybe wave 1, 5-wave move. And when I look at that, drill down, look at the hourly view of it, and it looks like a potential 5-wave move in here. Well, again, whenever you have, you know, these kind of moves, you know, you're going to get 1, you're going to get a pullback 2, you're going to get 3, 4, and 5. So we could be getting ready to have a little bit of a pullback in here. We'll see. But this is what I'm currently looking at, which projects a little higher on gold. And right now, that's the way it wants to act. All right, let's take a look at GDX. Let me see if I can, oh, I know where it is. I have got that over here. And I want to look at, here's what's been going on with GDX, just looking at the moving average view. I want to look at the orange view, my orange scenario, and So it's similar in terms of, the overall wave count, okay? In terms of from the high back here in 2011, having an A move down, trying to get a zigzag, trying to get this pattern to complete, okay? So now we're trying to say, okay, same thing I just talked about on GLD. So now I think all of this wild volatility that's occurred here in the last last couple weeks, I think is a big flat, an A, B, C flat. Now we're going to need this, if that's the case, and we truly are starting off in a fifth wave here, we're going to need this to continue to push higher, take out this high, which is 31.84, and then continue pushing higher. Now, when I do just parallel lines and project from the top of wave 3, that projects up here to around 38. When I look at Fibonacci relationships, it actually projects a little bit higher, up into the low to mid 40s in here. So one step at a time. The first step is we have to take out this high, 31.84. We do that, then we're going to continue to push higher in here, and I think the next minimum target is going to be 38, and we'll go from there. All right, so if you felt like the video was helpful, give it the thumbs up, and if you're not a YouTube subscriber, hit that little subscribe button. And if you'd like more of this kind of information on a regular basis, head on over to joehenches.net. You can see the little right here, and actually I've got it right here. joehenches.net. The name of the website right there is Beyond the Chart, and you can check out the membership. Actually, since I'm logged in, it doesn't show you the. Let me show you when I'm logged out. That's a little better. Now you can see what you see when you're logged out. So you can check out the website, the blogs, the membership, and if you'd like this kind of information on a regular basis, check out that membership. And we talk about these kinds of things and talk about all of the indices every day. All right, that's it for this weekend. Everyone have a wonderful weekend. We'll talk to you on the next video.